Hello, everyone. Welcome back to the Minute Markets podcast. My name is Sofia Cruz, your host, and here we break down trending financial topics with insights from the sharpest minds in the industry. This week we have Laura Null.
Thanks for having me.
Yeah, it's an amazing pleasure to have you here today. And we're going to be diving deep into the news of what's going on in many private companies, but also what's happening with precious metals. But if you could introduce yourself a little bit more to our audience, it would be so nice. And what you do at HSBC.
Of course. So I'm Laura Null. I'm a graduating senior year here at GWSB in a few days. So that's pretty exciting.
Yeah.
I have a major in finance with a minor in statistics. And I've done a lot of work here at the Investment Institute. I got involved early on. I was part of the Phillips Investment Fund with the Applied Financial Securities Analysis class. That kind of snowballed into a lot of things with the Investment Institute. I was part of the Quant Investment Project. I was part of the Cornell Undergraduate Women in Investing Conference. And now I'm doing risk and analytics for them as a part of an independent project. So that's what I do here at GWSB. And then at HSBC, I interned this past summer, and I split my summer between the precious metals desk and the electronic trading desk on cash equities. So thankfully, I'll be returning after graduation.
Nice. Mm-hmm. That's great news. I'm so glad we have you here, and you're going to be giving us like the insider point of view type of what's actually happening. Because you mentioned you've also done Ramsey portfolio at the GW Investment Institute?
So the Ramsey portfolio is part of the grad program, but I do work with the Ramsey portfolio as part of the independent project.
Yeah, and I saw you guys have like strong holdings on NVIDIA.
Yeah, they're very overweight in the tech sector right now.
Yeah, the tech sector.
41%, I think 31% of that's NVIDIA.
Yeah, and NVIDIA. And I heard the H20 chip sale is, having some struggles there with some geopolitical tension. Why do you guys think it is so important to keep an eye on these headlines when we're talking about how these companies can bypass their growth and also geopolitical tensions?
Mm-hmm. Yeah, I think, so my investment thesis, at least from the risk and analytics side at the Investment Institute, is to let our winners win. We're pretty overweight in tech. And so a lot of people early on would say that that's pretty concerning, but that's actually done incredible for us. NVIDIA is obviously one of our top performers, and they still have a lot of room to grow. No one's going to stop buying it just because Trump puts tariffs on, right? Mm-hmm. Obviously, there's a lot of headlines, but I think the main thing that we're doing is deciphering between that short-term noise between all of the tariffs and actually the long-term / medium-term impact on the actual profitability of the company. And right now, we don't really see that impacting the long-term profitability of the company at this current moment because we still think that they have a lot of room to grow.
Yeah, they have a lot of room to grow.
Mm-hmm.
And you also mentioned you were working with precious metals this last summer.
Right.
And when we were talking about geopolitical tensions, we needed to think about the precious metals market too. So what do you think the relationship there is between both?
Well, you mentioned earlier the volatility. Personally, I don't really believe that the direct volatility of the precious metals market with the chips is the only thing driving the volatility in the tech sector. I think it's more the volatility of, the geopolitical tensions and kind of the news buzz is driving volatility, because some of those markets for platinum, palladium, silver, they've always been illiquid. Those have always been volatile, and people don't really pay attention to that because that's what they've always been. So since that hasn't changed, what has changed is geopolitical issues, and that's driving volatility.
Yeah, exactly. And when we think about how people are saying, oh, the headlines are affecting these precious metals, it might not be true sometimes, right?
Right.
Yeah, and that makes a lot of sense because the VIX, it was hitting 50 lately, but that doesn't exactly show when we're talking about many precious metals prices.
Right, yeah. And I mean, some of those markets, they're always going to be illiquid, so that means that they're always going to be, at a certain point, volatile. The VIX will it will jump, but the VIX at the end of the day is always mean reverting. It drops very quickly.
It drops very quickly. Yeah.
So that will always trail off right as the market cools down,
Yeah. And I personally had a question for you of what you exactly did at HSBC, because you were telling me you were doing electronic trading and the difference between traditional trading and electronic trading. And I wanted to get your take on like algorithms and what happens in these moments when headlines are driving prices, or is there something specific that's so different that you've learned at HSBC?
So I think a lot of people have like kind of a skewed perception of algorithmic trading. You know what I mean? It's not that algorithms are meant to trade so that you have the least amount of slippage against the curve, right? So however things trade throughout the day, you want to be able to trade at that exact price. You know what I mean? Algorithms are built not to put more volatility into the market. Algorithms are built to decrease volatility because you don't want to make significant market moves, So on the low touch desk, which is what I worked on for cash equities, clients will send in very large orders, maybe like whoever knows, like 100,000 shares, right? But that can't be done all at one time, or else that creates large market moves.
Oh, yeah.
So the point is to execute right at the points of the most liquidity. So algorithmic trading really doesn't accentuate volatility, because what it's trying to do is mimic exactly the way that it was trading throughout the day regardless.
Okay.
Does that make sense?
It makes sense. So it's smarter and faster, or is it both, or just one of the other?
Well, it's smarter and faster, but it also it doesn't accentuate reactions, because at the exact same time that it's fast to make a reaction, it's also the exact same fast to make to double back and to create a reaction, right?
Yeah.
So the last thing that you want to do, especially if you're a sell-side bank, is have an over-exaggerated algorithm. You know what I mean? Because the hedge funds, they're going to go with whoever has the least amount of slippage in algorithmic trading.
In algorithmic trading.
So you're never going to be increasing the volatility, if that makes sense.
Yeah, that makes sense. And that's like a big misconception that a lot of investors have, even about like how algorithms work. And
there's a big difference between like algorithmic trading from the banking side and like quant trading, from the personal side. The quant trading from the personal side is I could build code to be like, oh, when this happens, trade this. But algorithmic trading is more like, we have your order. How are we going to execute that in the way that makes the most minimal impact on the market?
Yeah, so it doesn't create volatility.
So no one even knows that you traded, right?
Okay, yeah, that's the point. Thank you for
Mm-hmm.
clarifying that, because quant algorithm trading, it's totally different, and it's nice to know like the big difference there. And when we're talking about like algorithms, where do you think the human role comes to place?
Yeah, so I think, like, when I first took the job, a lot of people were like, oh, they kind of side-eyed me, and they were like, AI is going to take your job. And I was like, personally, I really don't think so. I get there, and obviously a lot of the volume is moving in the direction of low-touch algorithms so that you don't have to touch it. It executes for you. Obviously, that's going to happen, but you still have to make that trade. Someone on the other side of the computer has that view in order to make that trade, and that's never going to go away.
Exactly.
So I think that human component is always going to be there,
Yeah. And you yourself, do you drive yourself from data, or sometimes, because there are some times that you have to go with your intuition, what do you think those times are? And have you ever have like a specific experience where you have to use one of them both?
I think that trading is honestly all intuition, right? You know what I mean? Because past history is not indicative of future returns. So by theory, like, you always have to create your own view, Just because it was profitable in the past does not mean that's going to be profitable in the future. So, like, that human intuition is never going to go away. And being able to create a view that you don't think that the next person has is what's going to differentiate yourself, And AI can't really do that. AI is always going to point you to something that is the median that they think is correct. But that's not how you outperform.
Exactly.
So I think that intuition, for me, is the biggest part of trading. One of my biggest trading mentors, he always said it's an art, not a science. And I think that is really true.
Intuition is an art, not a science. And that is so right. And specifically in the markets, when we're talking about if algorithms are making this trade faster or smarter, what do you think makes you drive like an edge at HSBC whenever you're seating?
Yeah, I think it's the same thing as being able to have a view.
Yeah.
Like the only edge that you have over someone else is your conviction and your ability to follow through with that view. Everybody gets all of the same headlines. Everyone has instantaneous connection to data. Everyone has instantaneous news releases. Everybody knows what you know, but what's your view? What's your conviction? How strong is that conviction? Are you able to explain to me why? And then are you able to follow through with it? The number one thing is, you think of something 4 days later, it comes out in the Wall Street Journal, and you're like, I thought about that. Like what you never did, that's what's gonna gnaw at
it
you.
Eats you up
as an investor. So I think being able to be really confident in your own view will always be able to give you an edge. And then if it doesn't work out in your favor, that's fine. Markets are like 50-50. But being able to take a step back and be like, where did I go wrong?
Yeah.
Maybe it was a flaw in your conviction, or maybe it wasn't, But being able to be unemotional when you're deciding that.
Yeah. And I mean, you were working with the precious metals in the desk at HSBC. And what is the biggest lesson you've learned from it? Because you were saying conviction and
from precious metals, or just from trading on the desk?
It could be from both. If there's like a specific one that you remember a lot, it could be from many of them.
Okay, fair. I think so. I sat with. There's only one gold trader, right, for the entire HSBC floor. And that's pretty crazy, because we have the biggest commercial vault in the United States. And my role was to literally just sit there, and I acted as one of his clients on the Bloomberg chat, and I would keep an entire spreadsheet of like my P&L, and he was my broker, and he treated me the exact same as he would treat any other client. He gave me risk tolerances, he gave me everything. That was where I learned the most. He didn't give me any really instruction. He was like, but I couldn't just send him something and be like, oh, yep, 10,000 ounces of gold, buy, what's the bid? Because he'd be like, why? And I'd be like, I don't know, I just feel it. And he's like, that's not a reason. You got to have a view. You got to have a take profit. You have to have a stop loss. He always taught me the biggest life lessons was never be married to a trade because it will blow up in your face.
It will blow up in your face?
Yep. Number 2 was to live unemotional, to live in the middle. And 3 was never to sing happy birthday to anybody in the workplace.
Why that?
He hated it.
Oh, okay. That's like a personal thing, or do you live by that now?
No. I think it's just and it's an art, not a science.
Okay, it's an art, not a science. Yeah. But that makes sense. The birthday thing and also the art, not a science. That is so true. But that's really nice knowledge. Like, I really admire what you do. And specifically for you, like, breaking us down what the difference between quant trading and algorithm trading was, like, amazing. And specifically for people in the club or in the business school, because sometimes they don't know which way to go or don't feel comfortable about sharing what they want to do specifically.
Yeah, that's fair. I mean, when I got there, it was like a whole other world. I didn't know anything about algorithmic trading before I hit the desk, And they teach you that you go to school to learn how to learn, and once you get there, then you'll learn everything you know. So I don't think another piece of advice is that it's okay if you don't know.
It's okay if you don't know.
Not a lot of people do know. You have to get there and you have to learn under the people who actually work with it. Otherwise, you can't learn this stuff online sometimes. You got to be there working with the people.
Yes, it's the experience. It's the experience what builds you up sometimes.
Yeah.
Yeah. But thank you so much, Laura.
course.
Thank you really for making the time to spend with us today.
course.
And for our audience, thank you so much for staying until right now. And I hope you watch our upcoming episode. And please make sure you follow us on Instagram, on any of our social media platforms. You drop a comment, share with your friends. And thank you so much for being here again. Bye.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.